Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong and I am a coach with Schwab. Today we are going to talk about trading flag patterns. It's kind of a theme for the week. We talked about trading flag patterns in our Getting Started with Technical Analysis class yesterday. So you may want to go back and check that class out if you'd like a little bit of a refresher. But today we're going to talk about flag patterns and 4 or 5 or perhaps even 6 different ways that we could trade a flag pattern. And so that's what we're up to today. I'm delighted that so many of you are here to bring the class to life live, and you've been busy in the chat prior to the show starting. James is in the chat as well. James Boyd, he's a fellow coach and a friend, and he understands this whole flag pattern stuff inside out. So if you've got questions, don't hesitate to ask. If you're watching this in the archives and you have questions or comments, you can type them in down below, and I do look at those on a daily basis. So hello to Rhea and Jay and Leon and Paul and Mark and Villager and Sharon and Chicken Little. I love some of these handles, and Michael and Will and Vic and the rest of the gang. So glad that you guys are all here. If by chance any of you are not following us on X, why not? It's another free resource, and we're posting content there, that we think you will find helpful on a daily basis. So I encourage you to follow both James and I. My handle at Barb Armstrong CS, and James is at James Boyd CS. Okay, so let's get through our important information so that we can get right out. As usual, I have a lot I'm trying to cram into our 45 minutes today. Know that options carry a high level of risk and aren't suitable for all investors. And in addition, you have to meet certain requirements in order to trade options with Schwab, and not all will qualify. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to hone your trading skills, making sure that you understand a strategy and you've had the chance to trade it multiple times in Paper Money, that you understand how the platform works prior to considering trading it in a live account. One of the nuances or differences with Paper Money, however, is that short options will never be assigned early in Paper Money. So we can discuss that, but we won't see it happen in Paper Money. It can happen in a live account, and many of us have seen it happen. And I know the first time it happened to me, I was kind of caught off guard. So, be forewarned. And it's not always a bad thing, but it is a thing. And you want to know what you're going to do depending on which trading strategy it is, should you find yourself in that position. Yes, the Fed is, coming out with a live announcement today, and, that'll be coming soon. I have my own announcement. I know it not quite as anticipated as Jay Powell's perhaps, but, something nonetheless. We'll do a quick market overview. We're going to place some new example trades, and then I want to look at least 2 of the trades that we placed in previous weeks. So that's kind of what's on the menu. Coming up in March, so if you've never attended an in-person event, I used to love them as a client. I still love attending them as a coach. And if you come, and let me just bring this over here. So if you've never been to a live event, they are, complimentary to attend. You just have to get yourself there. We'll even cover your parking if there's parking as part of it. So this Thursday and Friday, Ben Watson is on his way now to get teed up for the technical analysis and options workshop. If you live in the Seattle area, it's not too late to join Ben and the gang there for 2 days of community and learning. And then Atlanta is next weekend. I will be there. If you're going to be there, please come up and introduce yourself. Would love to meet you. We can take a selfie if you would like, and we'll, post it on Twitter. I love having fun with that. Then we're off to Scottsdale. Chicago, we're doing an advanced options workshop. So if you feel that you're ready to get, your brown belt or your black belt in options trading, you may want to join us for that one. Maybe it's even a blue belt, but it's not the white or the yellow. But yeah, and I'll be at that event as well in Schaumburg in the Chicago area. So would love to see you there later on in March. But, anyway, these are available. So, and you just go to schwab.com, coaching live events. There will be a link in the show notes below, and I've just put it into the chat. So yeah, if you want to check that out. So that's it for my announcements. And let's go now to see what's going on in the market. So spoiler alert, we may or may not be looking at Netflix today. We did a trade on Netflix yesterday in getting started with technical analysis. So let's see what's going on with the S&P. So somebody had just said, like, holy smokes, what is going on with the market? So if you wanted to see, you know, what's happening today, you could go to 1 day, 1 minute, and all of a sudden we're seeing this big pullback. And so, you know, and we could see it come right back up. Who knows? But there's some kind of news one might expect hitting somewhere. And if we come to the NASDAQ, pretty similar. How about the Dow? Do we see a theme here? And the Russell. So all of them all of a sudden seem to be pulling back kind of dramatically. So that's interesting. If we come back to our, you know, 9-month chart, however, what we're seeing here on the Russell is, you know, an intermediate to longer term uptrend. We've got a bit of a pennant pattern setting up here, and it seems to be having trouble breaking above this diagonal resistance line. How about the Dow? Oh, I can type, honest. So yeah, you know, we saw a diagonal resistance line here that set up in December when, you know, the markets in general were pulling back. And then, you know, it broke through that, and, you know, a very modest, 0.25%. This is down today, but the overall overall trend is up, even I would say in the shorter term, you know, and we're very close at 447 and change, you know, to an all-time high on this index. When we look at the S&P 500, you know, we hit a new all-time high on this index last week, and then we had, you know, the news come out about the Chinese AI company and, you know, NVIDIA and a lot of other, you know, heavyweights in the tech sector. Yeah, this had a big pullback, and then we bounced pretty dramatically yesterday. Okay, so the NASDAQ, you know, it's interesting because we had this kind of pullback channel established, and then it broke out. It's like, was it a breakout or a fake out? Looked like it might be coming back into that channel, broke out again, and it's currently flirting with both the 10-day and the 30-day moving average. But the overall trend from a longer term is up, but we're seeing some consolidation here and a little bit of, you know, whipsawing back and forth. You know, and this is a very heavily, you know, tech-driven index, right? Okay, and how about volatility? Not surprised to see that it's up, although just up pretty modestly, like up 5% today. You know, and at 17.25, you know, still well within the range it's been trading in for the last many months. Yeah. Yeah, and sometimes just before, you know, we teach, Carol, just FYI, you know, we have to kind of turn off other news, et cetera, and make sure that we've got everything aligned with our tech team. So sometimes it's not, you know, I'm not up on the up to the minute news. But when we look at our sectors, you know, when we look at who's been leading for the last 3 months, well, it's not real estate, it's been at the bottom. We've got consumer discretionary leading, the Amazons and Entourage, and then communications. So the Metas of the world have been strong. You know, like when we come to communications, you know, it hit a new all-time high today. Communication sector, consumer discretionary. You know, this was an all-time high back here, hit the middle of December. It seems to be, you know, heading back in that direction, not quite there yet. Financials hitting a new all-time high today. So communications and financials have been very strong. And we're going to look at a stock in the financial sector. Okay. So, and then in the last month of those three, we've got energy has had quite a comeback, but it's been trading in this big fat range now since what? Since May of last year, and it's still in that range. So, although the last month it may have been strong, it's not a chart like the financials, is it? And then we've got healthcare. After a long downtrend, we'd say diagonal resistance break, perhaps when we're looking at price patterns on this. So could there be some stocks that might garner some interest over in this sector? We could look and see. Okay, so that's our quick overview. And, this class we do treat as a companion class to the Trading a Smaller Account class, which is Mondays and Fridays at high noon. So Maruska is asking which watch list I'm using. And this is it's a public watch list. It is the S&P 500 sector indices. And I have customized it because the default watch list would just give you the symbol, and S&P 500 hashtag 10 doesn't mean anything to me. So I added description. If you would like to see how I customize that, if you come to Trader Talks, and this is, one of the reasons you want to subscribe to this channel. If you come to the Trader Talks channel, the first thing you will see is the class that's currently being taught. But if you come to playlists and then come down to trading price patterns is what we have now. You want to come down and it's pink. The one at the top is pink. And this is on the power of compounding, which if you haven't watched, I'd highly recommend that you watch and then share it with either parents or kids or neighbors or friends, because I think that it's got a powerful message. So if you're not familiar with some of the strategies we're going to talk about today, which could include long call verticals, a long call with a target, short put verticals, for example, there are example trading plans here. And then down at the bottom, there's a whole bunch of short videos of which customizing a watch list is one, customizing your monitor tab, all that kind of stuff. So it's just a bunch of short resources that you can take advantage of. Okay, so let's come and look at our first example today, and it's in the financial sector, Citigroup. Now, if you're not familiar with the company, you can always come to the Analyze tab. It'll say, it's in the financial sector, and, it's a financial services holding company, founded in 1812. So it's been around for a hot minute, based in New York. You can then scroll down and look at some of the fundamentals, but we're trading price patterns today. And I talked about, that we would talk about trading a flag pattern. So we can, if we look at this and, as I like to say, we're playing I Spy with my little eye. Do you see, what I'm seeing here? Where this came up, came down for kind of 3 to 5 days, which is fairly typical. Sometimes you just get a 1 or 2 day pullback when the market is really strong. And then today we have this candle pattern. And I posted on X yesterday a summary chart of candle patterns. And this is called a bullish harami, where today's candle, the body of today's candle is inside the body of yesterday's candle. And that is considered a bullish configuration. Not that these are any guarantee that it's going to go up, but it's considered a bullish configuration. And so then the expectation might be that it would go up. Okay. So if we're saying, well, okay, so we have this bull flag, what's the length of the flag? You can measure it 2 ways. You can come down and say, okay, the low on this day was 70.98. and the high on this day was 82.77. And so we can just subtract one from the other. So that's one way to do it. Or you can take your drawing tool and kind of click down here and then drag it up. And we've got 1196. I actually did measure it, and it was like 1179, if you did the math. And then what might a potential target be? Well, you could have two targets. Some might say, I'm going to place this trade based on a swing target, but it's sitting at almost 81, and your swing target would be the previous high of 82.77. And you might say, hey, that's enough of a move for me. Others might say, well, I'd like to base this on the length of the flag. And so you come down to this low. And so your flag target might be around, this 91-ish range. So if we say, let's put our target right here. So this could be an example of a flag target. Now, we just recently had earnings on this stock, and it gapped up on earnings. So you could come and look at the live news and just say, well, how do the analysts feel about this? Well, Daiwa increased their price target to 96 from 89. We're looking at a target of 90, almost 91. Goldman Sachs raised their price target to 90. Have we got some others in here? Wolf raised theirs to 87 from 83. And isn't it interesting that no two of them, have the same target? But what we're kind of looking for is a trend. Morgan Stanley raised their price target to 109. And then you've got Citigroup raised it to 79. Like, that's a $30 difference. So they can't all be right. And, for Evercore, it's already past that target. It's currently sitting at 80. And 109, like, that's not even on our chart. It's so far above. And then you've got everything in between. And so they can't all be right. And it could be that none of them are right. But these guys do this for a living. So if you look at that and say, okay, well, we may want to take that into account in confirming that these analysts seem to have a bullish outlook on the stock as well. And this stock has been in the top three. The financial sector has been strong for both the last month and the last 3 months. So if we look at this, how might we do this? Well, we could buy shares of the stock, couldn't we? And just put a target here. And what's the advantage of that over using an option? Well, the advantage of that is that, if it takes its sweet time, and how long did it take to make this move? Now, we included a gap on earnings, so that's, is somewhat extraordinary. But that was what, about 8 or 9 days, that move? 10 calendar days, 8 trading days. So, if it takes 2 or 3 weeks, you've got time decay chipping away if you buy a long option. Where if you buy the stock, if it takes a month to get there, you don't have the time decay. You don't have the time decay issue. Now, in this account, our trading a smaller account, the largest position size we can have is $5,000. That's our guideline in that class. So if you said, okay, well, if I did want to do this as a stock trade and I've got $5,000 I could invest, and I'm going to divide that by $81 a share, how many shares could I buy? Let's say you could buy 61. How about we go with 50? Now, where might we put our stop? Well, if we look at this recent low, if we're expecting this to now become a support level, that recent low was at 79.48. And so if we said, okay, 79.48, if I take 3%, we go 3% below that. So 79.48 times 0.97. 77.09 would be our stop. And if we're paying, excuse me, 81 to get in, what are we risking? About $4 a share. And so if we buy 50 shares, we're risking about $200. Now, is there a guarantee that if we're stopped out, we'd get out at exactly that price? No, but our max risk per trade in this account is 500. And so, if we were down, got it stopped out for a lower price, the probability is that it wouldn't exceed, that 500. So we're going to come to our trade tab. We are going to right click. And what was our target again? 1991. Okay. We're going to come to our trade tab. We're going to right click. We're going to buy custom with an OCO bracket. The first thing we're going to do is click this little firecracker, turn it into a paper clip. We're going to make this 50 shares. And then if I just hit enter anywhere off, it will align everything. Our target is going to be $90.91. And our stop is going to be at 77.09. Now, some might say with a flag target trade, what some might decide to do as far as ongoing management, and let's just put this in, and then I can finish that thought. So we're getting in at 80.95. We want to exit if it hits our target, which will be a $9.96 a share gain, or if it goes down below 77.09, which would represent almost a $4 a share loss. And we are going to put this into our stock with target group. And this is a, well, we can just put flag target. And we're going to send that in. And again, you always want to read these notes at the bottom. Fire in the hole. So we now have that position in. Now, if we wanted, could we compare that to doing this with a long call? And we could. So we could come out this 21 days and say, or sorry, to 21st of March, which gives us 50 days. Now, do we think it's going to take 50 days? Well, it could take 20 or 30. And if we go out to February, the February monthlies, 23 days isn't a lot of time, and time decay will start eating us alive. Do we have lots of volume on the stock? Yes. There is an example trading plan that you could refer to. And almost all of them say, in this example trading plan, and you can make yours whatever you want. Like I've seen James, who happens to be hanging in the chat with us today, say he wants his minimum number of shares traded per day on the stock to be 5 million. In our example plan, we said 1 million. You can make yours whatever you like. And then we want at least 20 times the number of contracts. Well, if we've got like 3,500 contracts, 1,220 traded just today on the at the money strike, 8,000. So if we did the 80 strike out in March and we bought one contract, and then we did that with an OCO bracket. And what we might say with this is like, hey, if this loses half its value, we would like to exit. Or we could put in a stop based on the price of the stock. But if we said, well, I'm going to divide that by 2. If it gets to $1.67, it's either not moving in the right direction or not moving, it's lollygagging about. If it's moving sideways, then time decay can hurt us. And then we're going to make this a market order that's good till canceled. to say, hey, if and when this gets up to $90.91, goes at or above, get us out. And so this is buying the call. So the investment, I mean, we invested thousands of dollars in the stock. We're investing $335 in this option. And how much could we lose? All of it. You know, we could lose all of it. How much can we make? Well, it's saying, you know, our gain is technically unlimited because there's no telling how high the stock could go. But we have a target of exiting at $90.91. Now, if you're saying, well, what might this option be worth? There is a way to figure that out, or to get it, and I like to call it a guesstimate. And so we're going to come down here to our long calls, and we are going to, so this is a flag target, and we're going to compare it to the stock position. There we go. Now, speaking of comparing an option to a stock position, here's one. Prepare for our petunias to be frosted. But we did on the 15th, I believe it was. So we did a trade on Autodesk. In fact, we did 2 trades on Autodesk. Whoa. And so, oh, sorry, this was last week. We bought 15 shares of the stock, and then we did a long call with a 1 ATR target. And this is one of those ones where I'm kind of gnashing my teeth because we ended up stopped out. I went through the calculations on Friday because I believe we were stopped out of that one. Oh no, we were out of this one on Monday. I think we reviewed that in our class on Monday. So we were down on Autodesk. We got stopped out. And then what happened? And then it gapped up. So we had adjusted our stop up to like probably $2 below the low on Friday. On Monday, it gapped down on the open and then rallied, and we got stopped out for a loss. And it was a modest loss. We were down about $1 a share, but it would have hit our target yesterday. So petunias frosted on that one. But when you follow your rules, sometimes this can happen. And so it was successful in that we followed our rules. The thing that kind of got us is that we got nicked out with the stop, and then it went up to hit the target. Now we're still in the stock, and with the stock, we didn't have the same target. Instead of having a 1 ATR target, we set a swing target, and that one is still kind of moseying along. Our intention is to be out before earnings at the end of February. So we still have lots of time for that one to percolate. Yeah, somebody just said the reality of trading. And, you know, what can I say? Some days it's just a heavy side day. It's like, dang it. And then on eBay, this one is kind of interesting. We had our 1 ATR target at 67.57. And today it went up and hit a high of 67.64, which triggered our exit. And this is when having an exit that you've put into the system can be kind of a handy thing. And so with eBay, so let's come back now to eBay. This is another one where we both bought the stock and we bought a call. So we're out now on the call. And did we make a lot on this? Not a ton. But you know what? We're kind of going for base hits. We were going for a base hit with that, right? We weren't, looking for a home run necessarily. And so if we take this 335 and subtract the 257, we come up with $78. or 78 cents, times 200, so if it was 78 cents a contract times 200. So, and I'm not taking transaction fees into account here. We ended up $156 on that. And our return on risk, because how much could we have lost? We could have lost the whole $257 a contract, or $514. So our return on risk was that $78 gain divided by our $257 per contract risk, and that was 30%. And that was, what we intended to happen. And so not only did we follow our rules, but, that one was successful. And then we're still hanging out and waiting to see how this one works out, our stock position. So that's two of the trades that we placed in this class in the last couple of weeks. So somebody's asking, like, well, what's the benefit of buying both the stock and doing the long call? The benefit is just becoming familiar with different trading strategies and how they might work out. And it's really just for comparison purposes, because, we're doing this, to try and become more skilled investors and traders. It's a learning situation. And sometimes people will say, like, you're just totally frustrating me. Just pick the best one. And, we're trying to teach a man to fish here, right? And sometimes, like, both can work out and sometimes neither will work out. So you've got to understand, your risk. And with C, and it also depends on your account size. So if you come back here to this one, could we have sold a put? Like at maybe 80, you might say, actually, I wouldn't mind owning Citigroup. So if I sell the put and it gets put to me, I'm okay with that. But if you sell the put and it's put to you, that's almost a $9,000 position. And we don't want to have a $9,000 position. And so you might say, well, hey, we have $20,000 sitting doing nothing in the account, but we only have $5,000 available, like $49.72 in our cash and sweep. So, that would put us in a bit of a pickle if it were put to us. And so, could we do a short put vertical? We could, but, to do a short put might not be the wiser decision. And so if you're, feeling confident in the bullishness of this setup, and a short put vertical, I say, is kind of sort of bullish. So could we come down here and sell the 79, say, which is below this recent low, which was 79.48. So could we sell the 79 and then maybe buy the 78 as a way of defining our risk, or the 77? And so if we come out here, and here time decay is our friend. So this 23 days to expiration might be attractive. And again, 5 million shares traded, lots of open interest. So if we look at this 79, we have a 2-cent bid-ask spread. So if we look at selling a vertical, oh, isn't that interesting? It's now 30 cents. When I looked at this earlier, it was 50. And then if we go to 78 to 77, notice it was 30. We get 53, but we're doubling our risk, and we're not doubling the credit we're getting. Now, you've got to take into account, we've got almost a 29% chance that it could be in the money at expiration. It drops to 23. So your probability, if you go to the 77 strike, so the probability of it going through both strikes is lower. But I'm getting, this is my return on risk here is 53 divided by $1.47. It's 36% for a trade we'd be in for 23 days. So that meets our criteria. If we did 30 divided by 70, That's 43. And so you might say, well, I've got to pay, I'm going to pay more if I do more contracts. So I'm going to pay more in commissions. It's how confident are you that it's going to be above the strike? And if you're paying more in commissions, it's, $1.30 in transaction fees to get in and $1.30 to get out. But then you're making the equivalent of maybe $8 more a contract. So you're still ahead to do the narrower, strike widths. I can speak. Okay. So we're going to go with the narrower. It's how much are we risking? $70. So per contract. So if we said we can risk up to $500, if I divide that by 70, I could do 7 contracts. And some don't like to put in an exit. In our example trading plan, we've said, hey, you know what? When I've got 80% of my max gain, I'd like to close it out and take my risk off the table. So when this is worth about 6 cents, I'd like to buy it back. And regardless of how much we're up or down, come the week of expiration, we don't want to let this go into expiration. And why is that? Well, because there's always a risk that it could end up closing between the strikes. And if it closes below the 79 and above the 78, then this would likely be exercised. And now we're the proud owner of 700 shares of Citigroup at $79 a share. Okay. Okay, so we are going to hit confirm and send. We're going to put this in our short put vertical bucket. And we're going to compare this to our long call and the long stock positions. So on this one, we're, doing a triple. So we can compare them. So on the short put verticals, we don't put in a stop. We're position size that if we take the max loss, we aren't blowing up the account. But what we may look for is, hey, if this breaks below 79 and it looks like it's not coming back, then we may just decide to exit. And we do have one of those, AVGO. So AVGO got caught up in this Chinese, I forget the name of the company. It was a very early start to my day today. And we had this pennant pattern, a diagonal resistance breakout, and then boom, this tanked along with NVIDIA and several other tech stocks. And, this is a long way for this position to come back up. And so on this deep stack, thank you. And so on this one, we might just say, well, the question is, how much more have we got to lose? So if we come down here to this short put vertical, how much more have we got to lose? Well, we're at 427. So we could lose another $65. And just because, we're not at max loss, and isn't that fascinating? We're not at max loss, and we're not just through both strikes, but we're through both strikes by a country mile. And, we sold the 235 short put. So if this were in a live account, the risk as we approach expiration on February 21st goes up. So someone might have just bought a protective put on their stock position, and they might say, hey, you know what? You've agreed to buy this stock from me at 235. Here you go. And do we want to buy? We don't have $23,000 in the account. So if that happened, now we definitely have max loss, or, the margin guys are going to knock on our door and go, hello, Barb, would you please put some more money? Pretend money in your pretend account, but if this was a live account, they wouldn't be pretending, and they might not be knocking at my door. I'm using some artistic license here, but they would reach out to you, and say, hey, you're underwater here. And so what would you do? Well, then you would go in and exercise your right to sell it at 230 and you take your max loss. So we can avoid that by getting out of this now. And so that's what we're going to do. So we're going to come, and we don't have a position. I don't know what happened to our exit on AVGO, but we're going to come in here. We're going to right click. We're going to create a closing order, say, dang it. So we're locking in this loss, but in doing so, we're preventing taking a max loss and, the angst of potentially being assigned were this in a live account. Okay, so I'm going to make this 435. Well, it's now 410. We'll see. We'll make it 415. And I'll make sure that we get out of that. So thank you for setting that question up. Okay, yes. So Meta is coming with earnings tonight. We've got a lot of heavy hitters coming with earnings tonight. We've got Tesla, Meta, Microsoft are all reporting earnings after the bell today. So is IBM, LRCX, Western Digital, ServiceNow. So a lot of companies coming with earnings. Okay, so we've done some trade management on 3 different positions, eBay, Autodesk, and AVGO. We did 3 trades on a Citigroup that we will compare and contrast in the upcoming weeks. And we are out of time for today, but I thought it would have been interesting to look at American Express. Now, when I first looked at American Express, it was kind of a vision of loveliness on the bull flag suit, in that this candle was up and it's now down. So were we to put in an example trade, we might have put in a trade with a conditional order. But do you see this bull flag configuration that I'm seeing here? But what we're looking for now is either a close above the high of the whole high of the low day. We're looking for a hold entry, which might be part of some traders' trading plans, a bullish engulfing pattern, some type of candle pattern that would indicate that this, might be a flag pattern that a trader might have an entry on. And then we did one yesterday where I believe we put in a conditional order because we didn't have that hold yesterday. And it filled this morning and we bought shares of stock. And we may come back and look at this one again and trading a smaller account on Friday, because if you don't have a large account, could you do a long call vertical or, a short put vertical, below these recent support levels, and those are possibilities if you're looking for other things to practice. Yeah, and Thea is saying, don't forget to mention the 4 p.m. class. So tomorrow there's a class. Starting next week, it'll be called After the Close, I believe. It's being rebranded. And so we're looking at the idea of that class is, if you don't have the opportunity to look at the market during the day, you have to wait till your kids are in bed, you're home from work, you've done your running around to hockey and lacrosse and soccer, whatever your kids are in, and now it's 8 o'clock at night and you want to look at how you could look at the markets and what type of investing or trading strategies might be appropriate when you don't get to be available when the markets are open. So guys, that's a wrap for today. I'm often asked in the surveys, and I do believe that there was a survey today, but I've often asked to can we review what we did? So we did 3 trades on Citigroup. We closed a position on eBay was closed, and then we looked at some potential with American Express, AXP, and Netflix. So if you'd hit the like button, that helps move things up in the algorithms. It also helps James and I know that you found this content valuable. Subscribe to the channel. Make sure that you're following us in the Land of X. So that's James Boyd CS and Barb Armstrong CS. And last but not least, have a really awesome rest of your day. Get out there and hug someone you love. And I will look forward to seeing you tomorrow. Take care, everyone. Bye for now.